Thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We discuss what's impacting mortgage rates on a daily basis, whether it might come from the economic calendar, headline news, or geopolitical, sometimes a combination. But sometimes it can really get confusing out there if you notice that the market sentiment changes, where good news is now bad news, and vice versa. And if you're just kind of sitting on the sidelines watching, you're like, well, what's going on here? And well, we try to get into it and kind of give you what's the lowdown, what's going on, and why it's happening, and where we're looking, what we're looking towards. And hopefully, this will give you information that you're looking for, whether if you're looking as a consumer looking to follow rates because you may be looking to refinance or buy a property, or perhaps maybe you're in the industry just trying to follow along here. And hopefully, I hope that this information or these videos will give you that the information you're seeking here. A little bit about myself is I am a loan officer. I do work with a national lender. We do loans in all 50 states. I love the opportunity to help you guys if you guys are looking to refinance or purchase. So please reach out. But more than that, we like to be here for you guys as a resource. We'd love to be able to help you guys out. So if you guys got questions, please reach out. We're here to help you guys. So without further ado, we'll jump out into the economic calendar. This week we do got some important data coming in. We'll have the GDP coming in. We'll have durable goods coming in. We'll have the big one will be Friday with the PCE, which is the personal consumption expenditure. The core PCE is the Fed's favorite gauge for inflation, so that will have, since inflation's on everybody's minds these days, that will definitely have a high impact for this week. So for today, we got the market manufacturing PMI and we got the services PMI. So both gauge the manufacturing side of things and the services. So we'll start off with the manufacturing for the month of May. And anything above 50 on these indexes is considered expansion. Anything below goes into contraction. So in April, manufacturing was up to on an index of 59.2. Forecast was supposed to dip a little bit to 57.5, and it came in right at expectations. However, if you look at services, it went from 55.6 in April with a 55.2 as forecast, and it dipped even further below that to 53.5. So obviously that's a little bit of a miss there that will catch people's attention. Last but not least, we got the new home sales for the month of April. So March was revised lower from 763,000 seasonally adjusted units to 709,000. Forecast was supposed to come in at 750,000, and there was a huge miss down to 591,000. Of course, a lot of that is being attributed to the increase in mortgage rates as a result of that. So I would say a big miss on both services and new home sales. Stocks are down today, taking a big bit of a hit from the data that we saw today, but also we're still seeing a lot of corporations coming out with their earnings reports and having pretty big misses. The inflation's really cutting into a lot of corporations' profit margins. People like Disney just came out with one that was disappointing. The big tech companies that were in a rising rate environment, they're taking a big hit of late. So Nasdaq, for the most part, has been, I think it's Nasdaq or SP, kind of went into a bear market recently. Dow's taking a big hit. They have like 9 losing weeks in a row. We're going to the 10th, potentially 10th week, and that's the longest streak we've had since 1932. So almost 90 years is a long time. So with this environment, investors are kind of looking at, they're trying to determine, are we going to see a recession? Are we going to see stagflation, inflation? You got issues going on with China with their lockdowns, which adds more to the supply constraints. You got the war in Russia and between Russia and Ukraine. Again, that adds more volatility to supply constraints because we do trade with both countries. And then again, we've got supply constraints here with the rising oil prices to baby formulas shortages to potentially food shortages and everything else. So again, investors are kind of looking at all this and trying to, right now equities is kind of taking a big hit as they see where things are going. They don't see the Fed easing up on the talk because they need to fight inflation. That is the very basic reason why they're raising rates to try to slow down slow things down and try to cool things down in terms of inflationary data. And so this is where things are at. So what's going on with the correlation between bond market and stock market? Sometimes they go in the same direction, but a lot of times they go opposite. So when the investment dollars are coming out of the equity market, they park it into what they call flight to safety. And this is what we're seeing here with mortgage-backed securities. Especially late the last week, we pretty much saw that correlation, and this today. So right now we're up about 52 basis points, which translates to, well, better pricing. We're approaching, as you can see here, now we're approaching the 50-day moving average, somewhere we haven't seen quite some time here. And again, that would be, we just passed this, which is the first time we've basically gone over the 25-day moving average since October 21. And now we just finally crossed over, and looks like we might be starting a trend here. So we've had several days here in a row where we're kind of in this above, kept above it, which is this adds to the strength as a floor for us. So today, as you see here, the volatility went down slightly, but as soon as that data came in with the economic calendar, things went up for us, and the stock market, of course, went the opposite direction. So this is kind of what we're seeing today, the volatility of the markets. And if you look at treasuries, kind of something similar. It was up here, above that, just below this technical level, and it dropped. So we're now right down to 2.74 so far this morning. Lastly, we'll touch on what's going on with the mortgage rates. Again, as I indicated before, these do have 1 day delay, so they're going to be represented to pricing from yesterday. But the average conforming loan limit size and the rate for those. All right, so 30-year now is at 5.36, and 15-year looks to be at 4.79. Is kind of what the average of what we're seeing on these. They do have points built into them. So if you guys would like a rate quote, please reach out. We're here. We can certainly accommodate. And if you guys get questions, please reach out. We'd love to be able to help you out with whatever you're looking for. And last but not least, if you guys like these videos, please help us out and smash that like button and share us. We greatly appreciate folks and you taking the time to watch. We hope it gives you the information you're looking for. You guys have a great rest of your day. Thanks so much for watching. We look forward to see you guys in tomorrow's video. Bye-bye.